Hey guys, what's going on? So today we're going to be doing an update on Nordic American tankers. And just today or yesterday, they wrote a letter to shareholders talking about the current events such as OPEC restrictions of oil production, tensions between China and the US, the COVID-19 pandemic, um, and Middle East tensions and sanctions impacting jurisdictions where NAT vessels are operating. And this restrictions are just referring to Venezuela sanctions from the U.S. So after doing a bit of research, the U.S. has imposed sanctions on Venezuela and Iran to deter shipments of oil. So that's what NAT is referring to here. So this might not be good for business of NAT, but again, there still is optimism, and they encourage us that they do see positive development for the remainder of 2020 and for 2021. So they emphasize that dividend remains a priority, and as you can see, their dividend for the second quarter is going to be 20 cents, up from 14 cents, and that just reflects increased spot price in the oil tanker market in 2020 as inventories piled up, and we'll see that in a graph soon. Um, and they think that China and other Asian economies seem to be recovering, plus the international stimulus packages and low oil price. Um, they think that the world economy is going to recover sooner rather than later. Although inventories are increasing, oil inventories are increasing as we can see here. So the white line shows oil inventories. And again, this was just published yesterday. However, the supply for oil is also decreasing. And it looks like here, like it's leveling off. So although sure, there's still a lot of crude inventories of oil, it is leveling off. And here they also say that in China, the number of cases in a new outbreak of Rona in Beijing rose to above 150. So that's also concerning since China has a head start on the pandemic because of us in terms of reopening, and now showing that the number of cases is increasing. That's not a good sign. Um, but anyways, they think, and they just end that the taker market turned in a positive direction a long time ago. Um, so the kind of mixed news here. And even further adding to that, it's a bit concerning that, so the blue line here, or the dark blues, is the tanker rates of 2020 so far. So as you can see, this steep increase where it's crazy, it's insane. The spot tanker price increased to over $100,000 per day. So if you wanted to store oil on one of the tankers, it would cost you more than $100,000 as compared to, below like $30,000 just in February. So that's because of increasing inventories of oil. They didn't know where to store them, so they stored them on tankers. And because tankers take a long time to build, they were to charge exorbitant rates. And this is just insane. And now it's coming back down, but it's still above 2018 and 2019 levels at this time. Who knows if it'll actually fall below? I don't think so. And I think at least some optimism is that in the summer months and leading into the fall and winter, tanker rates usually increase, as we can see for the previous years, 2019 and 2018. If we look at year to date here, the tanker rates, these year to date levels for 2020 have been similar to 2008 levels. And that's again a good sign. They're just making money left and right, just the cash machine is going. Brrr. Anyways, um, as they're making the same amount of money as in 2008, or at least so far, we'll see how this pans out. This might lower the 2020 year to date tanker rates. We can look at just like the stock price where it's trading at now 445, and they're making the same amount of money as they made um, in the 2008 crisis, where the stock was trading at, you know, 20 mid 20s. And you can say, well, why isn't it trading near mid 20s? I mean, one obvious answer is share dilution. So they added many more shares since then. So I believe the most recent one was in 2017. They offered 40 million common shares at a price of 275. I mean, I wish I got in there and I would sell it for even, $5 is not a bad profit. Anyways, so that's one reason. Again, since the tanker rates are declining, that might also be an issue. And again, some more concerning news here is that this week the spot price, so how much you'd have to pay per day for a Suezmax vessel, which NAT owns 23 of them, is 12,500. So again, kind of concerning there. But again, to buffer that, you have to understand that NAT operates somewhat of on a contract basis. So remember, there's 12,500 this week, but they say that they already booked their ships for about 75% of the trading days um, at an average of $50,000 per day per ship. And the ships operate at an operating cost of $8,000 per day per ship. So again, that's just like, and that goes straight to the bottom line, a huge amount of profit that they're making. So again, this is not too concerning, and we'll see how it goes in the next couple of weeks and months if this picks up again and tanker rates soar because inventories are rising. Some final piece of news is that implied volatility surged for NAT, and they're just saying that NAT needs to pay close attention to the stock based on moves in the options market because the July 17th, 2020 $10 put had some of the highest implied volatility, and that just means that this stock is going to have a big move or is expecting a big move in one direction or the other. And I mean, since NAT is in the commodity market, it's definitely based off supply and demand. And again, they also say in their relation that there's not many supply of ships, so limited supply of new tankers has been the foundation and driving force of their increased profits. And so they see that for the remainder of 2020 and 2021, it looks good. So maybe we're thinking in the next couple months in the summer that the spot price rates of tankers is just going to increase as in previous years, and the stock price is going to increase. I think that's my take on it. But yeah, that's all for this week. I'm still bullish on NAT for the foreseeable future. Let me know what you think. Please like, subscribe, and have a fantastic day. Thank you.